Hello, everybody. Welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As always, keep in mind that there's risk involved with your trades. No one trade is guaranteed to profit. So you want to manage risk in a way that makes sense to you. And we have some tools in that regard that we'll go over if we simulate a trade or two in the session within the order window on our web trader and in our mobile app. There's some stuff built into the order window that helps you calculate exposure, potential profit, etc., to make the risk management side of things quite a bit simpler. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. So from our main website, we can log into the web trader platform, which allows you to trade on both the MT4 and MT5 accounts from the same location. And also on your live accounts and demo accounts from the same location. And also, if you trade via mobile, you can use our mobile app, which has the same functionalities and features, the free signals, the market news, the market buzz, economic calendar, everything's there in our app, same as what it is in our web trader platform, and both allow you to trade on MT4 and MT5 accounts from the same location. And so if we log in here in the upper right corner, we'll be in the web trader. Now, our primary focus today is fundamental analysis, but as you'll see as we go through the session, the technical analysis goes hand in hand with the fundamental analysis, more specifically to zero in on entry points and exit points that you might prefer as we look at different price levels and trends on the charts. So a good place to start, and typically, there's two main areas. I would start with the fundamental analysis in the platform, either the market buzz or the economic calendar. And in a third place, you can also look at the news feed. If we have time, we'll look at that. The news feed is found here. You just click on it, and you can go through and see which instruments are being talked about and what the news is on each. We'll maybe read through that a bit if we have some time. But let's first start on the economic calendar, which is found here in the discovery section. And so we've got market buzz and economic calendar being two important tools for fundamental analysis on our app and platform. Now, if we go to today's date on the economic calendar, and you can pick the countries that you prefer to look at announcements from, and you can pick the type of announcements in terms of high intensity or high importance, medium importance, or low importance. I kind of leave the low importance ones off because they tend to have less effect in terms of price movement on the charts. And so the medium and high level announcements, and particularly the high level, tend to have more of a reaction, to cause more of a movement on the currency pairings that are listed with this economic calendar. And so if we look at upcoming announcements, we can see the next high-level announcement, and really the only one left today, are the initial jobless claims out of the U.S. Now, I don't know if you paid attention to what happened earlier this week. If you were trading at all, I'm sure you did. The market really started to drop in terms of the equities, the indices, the safe havens like gold strengthened a bit, maybe the yen, the Swiss franc, the USD had some weakness. It didn't have its typical safe haven strengthening because of what the news was that was being reacted to. This last Friday was the non-farm payroll report out of the US, along with the unemployment rate and other key data figures out of the US. And what we saw was a much greater slowdown economically in those numbers out of the US than what was expected. Okay, there was expected that the jobs numbers would start to drop. It was expected that maybe the pay numbers weren't going to be strong, but average hourly wage dropped more than expected in the U.S. Job creation dropped more than expected, and unexpectedly, really, the unemployment rate jumped up a couple points and really caught some investors off guard. And so the jobs area was really seen as the last part of the U.S. economy that was being stubborn in terms of slowing down. And the aim of the high interest rates in the US after raising the interest rates up 9, 10 different times in the US to bring inflation down. The aim was slow the economy down, hoping for actually worse numbers to make sure that inflation was under control before then lowering the interest rates back down, hopefully. And so, there's actually been a bit of rejoicing each time maybe the factory production numbers or the CPI data, the PPI data showing price the price figures coming down more than expected. There's actually been positive momentum with that. Each time the numbers out of the US were a little worse than expected, the markets actually went up, saying, oh, good, they'll be able to lower interest rates back down then if inflation is coming down a little faster than expected. Well, we had the opposite reaction this last Friday because the numbers were so bad, paired with a jump in the unemployment rate. It spooked investors that while not only are things slowing down in terms of inflation, but it looks like maybe there's a full-on recession coming in the US. That was the fear Friday with how bad the numbers were out of the US, was that, wow, maybe there's a recession coming. And, up till now, the talk was, wow, it'll be a soft landing coming out of this inflation problem. And by soft landing, it was expected that the US economy looked like it was just going to keep rolling on forward with pretty strong data while inflation came down. And then all of a sudden, Friday, the realization was, wow, it looks like maybe a recession is on the way. Now, it may or may not be, but that was the fear. So coming into this week, Monday, Tuesday, we really saw a lot of fear. We saw a bounce back yesterday in the markets a little bit, but it did not gain back all of what dropped since last Friday. And really, there's been dropping from Thursday, Friday, Monday, Tuesday, yesterday, a little bit of a reprieve. And today, it looks like the markets are trying to push down once again with the recession fears. And so that's where we find ourselves fundamentally, as in terms of the sentiment, as we come into these jobless claims numbers. So you can imagine, what do you think will happen if the initial jobless claims come in higher than expected, meaning worse numbers than expected? That'll just feed into the recession fears. We're talking about jobless claims, not new jobs, but jobless claims, meaning people losing their jobs. So if this comes in higher than expected, that's worse than expected news. So if instead of dropping from 249,000 on the last numbers, instead of dropping to 247,000, which is the expected column, if this comes in above that, say 250, 255, boy, you could see another negative reaction with the equities, the major indices potentially having bearish pressure again, like earlier in the week and the end of last week. So we need to keep an eye on these numbers as they come in. Now, we can use this tool to see what has happened in the past when the numbers come in higher than expected, worse than expected. And usually I'm pairing Euro USD, but I think it makes sense in this regard to pair the USD since it's been weak. Since bad news is now weakening the USD, it seems, we probably want to pair it against something that strengthens with bad news. And we can all kind of guess, what's the safe haven currency to pair the US against, that if there's bad economic news and fear, what currency tends to strengthen if the USD is going to weaken with that news? And you might say the Japanese yen. It's one of the number one safe haven currencies that people run to when they think there's fear on the markets. And so we could also look at USD Swiss franc as an example. Also, Swiss franc has been a traditional safe haven type currency. So if we pair a USD that we would expect to weaken with bad news, and the yen should strengthen with bad news, then if these numbers come in above forecast, which is bad news, higher than expected jobless claims, we see in the past then 83% of the time, 83%, 5 out of 6 times, the movement was down in the 4 hours after the announcement, if the numbers came in higher than expected on jobless claims. Now, you might expect the opposite reaction if it's good economic news. If the numbers come in below forecast, meaning not so many jobless claims, then we see the opposite. 83% of the time, the USD goes up against the yen. USD strengthens with the good news, and the yen weakens with the good news 83% of the time here. Now, you see the one that went down a lot. So the outlier, if you just have a stop loss that's a decent distance, and it works out with these type of statistics, you take one loss with limited stop loss, and the rest would be in the positive after 4 hours. Okay, and we're talking average range movement of 129 pips. This is not a small movement. You think these candles look small. Look, if you follow it across, this one's 140 pips, almost 140, 138 pip movement up in the 4 hours after the announcement. The smallest one is 31 pips, and the rest are 40, 45, 48, and over 50. 62 pips on this one. And so huge potential for climbing the majority of the time if this comes in below forecast, meaning better than expected news for the US, less initial jobless claims, okay? And you get the opposite effect if it comes in above forecast, 83% of the time down, with one going up. And again, average range movement is large, over 73 pips average range movement in the 4 hours after the announcement. So don't let the size of these candles fool you. Okay, this one here is 86 pips movement. Okay, and these are like 30, 40 pip movements. Only one went the other way. Okay, and you can look and say, well, that's after the numbers come in. How do I get my trade off? Well, in the first 5 minutes, you see the average range movement is 22 pips. Okay, in the first 5 minutes, average range movement 22 pips. After 4 hours, average range movement over 73 pips. Okay, it's the same in the upward direction. Okay, if it's below forecast, the majority go up in the first 5 minutes. Average range movement 27 pips. Okay, these barely climbed. You see these here, 12 pips, 10 pips, 10 pips. This one's even 1 or 2 pips up. This one, the maximum was 40 pips up, but after 4 hours, we've got 130, 140 pips up. And these are much higher than where they were, 40, 50 pips than they were in the first 5 minutes. Okay, so it's not like you don't have time to trade once you see the data. There's further movement on average, looking at the past data, once you go extrapolate out from the first 5 minutes to 4 hours, continuing in the direction the majority of the time that you expect based on this data. Okay, so very powerful information here that if you want to do some data-driven trading based on how the announcement comes in, you have the benefit of hindsight then. You know what it's done in the past, and you get to see the numbers before you make your decision which way to trade. Okay, you just have to catch an entry point that makes sense. Once you see the data, if it already spiked 100 pips up and you expect it to climb, well, then you're late, right? You missed it. But maybe it spikes down 5 or 10 pips, and the data shows it should end up in the other direction after 4 hours. So you at least would know what direction you want to trade based on how these numbers come in, and then go after your entry point and throw in your stop loss and take profit based on the expected size of the movement from the past data. Okay, type okay if you're with me on that, or I'll pause if you have any questions. Okay, I don't see any questions popping up, so I'll continue. We also can look at tomorrow. I saw an announcement out of Australia, I believe it was. It had some pretty good statistics from the past. This business confidence announcement out of Australia, the time frame in my time zone, that's a little hard for me to trade on, but depending where you are in the world, this time here will show for your local time zone. Perhaps you're around and awake to trade on this. If we look at the past data, I like the JPY pairings lately. You can check the different pairings to see what gives you the best statistics from the past. But you see right here, if I look at above forecast Australian JPY, if this business confidence comes in above forecast 100% of the time over the past year or so, look what has happened. Above expected numbers on business confidence out of Australia. The Australian dollar has climbed against the yen 7 out of 7 times, with an average range movement of over 32 pips. Okay, in the first 5 minutes, okay, 3 of them actually went down in the first 5 minutes, and the average range movement was only 6 pips. So you would have the benefit of seeing if this came in better than expected. On the Australian JPY, if you in the first 5 minutes see that it's only moved like this, maximum up 10 pips, 9 pips, some of them even down, and then after 4 hours you expect that they're all going to be up like this based on the past statistics, it's almost a no-brainer to try and take a shot on a trade like this if you watch this announcement come in and it comes in above forecast. The time you trade may be the time it loses, depending on your entry point. But if you get practiced and gain some experience at trading with this sort of information, with this sort of data, there's no reason why you can't find success. If you try an announcement like this 10 times, maybe you'll lose 3 or 4 and win 6. And that would be great, okay? To win 6 out of 10, 7 out of 10. But don't judge yourself on one shot. But I'm pointing that out because nothing's 100%, right? Just because this data shows it went up 100% of the time doesn't mean that the next time has to go up. So just keep that in mind. But this is how data-driven trading works, and this looks like a strong trend in the upward direction if this comes in higher than expected, okay? What if it's below the forecast? Okay, less impressive upward movement. It didn't go down, but it's less impressive upward movement. It's not 100% of the time. It's only 24 pips movement up. So I think I would choose not to trade if it comes in below expectation. But when it comes in above expectation, the statistics look much stronger. There's a larger range movement, and it's statistically in the same direction the whole time. Okay, so this is an interesting one, that you have such a strong upward movement when it comes in above forecast, still upward movement when it's below, but not as strong. Okay, so to have the greatest statistical advantage, I would be looking for the above forecast, and if it comes in any other way, maybe I don't trade on it. Okay, and there are other announcements that you could check out of Canada, but it's the same process. You can go through and see which ones with which currency pairings give you the best statistical chance based on the past movements to try and grab some success with the current announcements. And this, we're only looking at today and tomorrow announcements, but there were great announcements all week that you could have been trading on with this fashion. And so each weekend coming up, it's the weekend soon, Saturday, Sunday, you can find some time to look through the upcoming announcements for next week and pick 3 or 4 or 5 or 6 that look the best to you that you'll be able to trade on in terms of your schedule and availability, and see what kind of success you can have trading off the announcements that show the greatest statistical predictability from the past. Okay, and I promise you it might not be as easy as it looks, but you also should be able to find success eventually with this type of strategy. Okay, so what else can we look at here? If we go to the market buzz, I saw Disney had their earnings numbers come out yesterday, and they were better than expected. The earnings per share, better than expected. Their revenue was better than expected. And apparently their streaming unit, online streaming of movies, and they're competing with Netflix and those sort of companies with expanding into that realm. That actually helped pull their numbers up. So for the first time, their streaming area was profitable. And so if you don't see a bubble for the one you're looking for because it's not trending as much as Nvidia and Apple and these others, so then we can just search and start to type Disney and it'll pop up. Here's Walt Disney. So some things jump out at you as we look at something like this. First of all, the short-term prediction is for Disney to fall 10.5%. It said the same thing yesterday, by the way. And you'll see yesterday we did a technical review. If you look at yesterday's recorded session, we also talked about the fundamentals a little on Disney, and we saw that the prediction was a drop, okay? And if we take a look then at the trade we took yesterday, the market's not open in the US yet, so this isn't moving. But we went with that sell signal yesterday, and on a short-term move, it looks like it's doing well, okay? We also put in a longer-term pending order that if it had broken up above the upper resistance, we were going to close this buy position would have closed on the stop loss, and we'd be in on a buy. Why did we do that? Because those earnings numbers were so solid out of Disney. So we were selling with the technical signal and the negative feel about recession yesterday with the sell signal on Disney for the short term. But for the long term, we were looking that if it does break upward, those earnings numbers and revenue figures that were so much better than expected on a longer term move, maybe it made sense to buy. So we actually diversified with the moves on Disney. It never triggered the buy because it never broke above the resistance, and that was our plan. We'd have to start an uptrend in order to buy. It didn't happen, so the buy did not kick in, and we went with the current momentum, and that trade it looks like it's doing well. Now, if we go back to Disney here in the Market Watch, or Market Buzz, I should say, we can see that signal still carries into today with the suggestion that perhaps it'll continue to drop another 10% or so. And the technical signal then has it dropping down into the 79 zone. Yesterday, it showed dropping maybe from 88 towards 80. And now it's got it predicted that it could drop even further down below 80 towards 79. And so they've extended this signal and downward trend. The fundamental news, though, as I mentioned, what we see in the articles is talk about how strong the earnings report was. Disney reports strong Q3 earnings with first ever streaming profit. Okay, we can click on that, get a summary of what they're talking about. We can click and get the whole story. And what we'll see is people are excited about the fact Disney's numbers did so good. And we can go to a lot of different articles that are giving you the feel that there's some positive news about Disney right now, a positive feel about those numbers. Okay, so I'm not saying that this signal won't continue down. In fact, I have an open trade on it that's doing well. But from a fundamental news perspective, you might start to look in the bigger picture. Could those earnings numbers and revenue numbers that were so strong on a longer term move make sense in the opposite direction? Okay, and so something we can look at, we'll pull up the Disney chart, and I can actually go to, let's see if we've got the chart here. Let's expand it and go maybe to 2-hour candles. And then you see that the active trade, this is the stop loss on the sell from yesterday. The open price is here. See, it's labeled open price. And the take profit is down this direction. Okay. And so here's the take profit down here. Let's switch to maybe 4-hour candles and get everything on one screen. And so we've got the open price up here. We've got the current price. You see it dropped from the open price here straight down. So we're about a third of the way to the take profit that we were looking at yesterday, maybe a little more than a third of the way, 40% of the distance to the take profit that we were looking at. And the signal is for it to maybe drop even to 79 down here. Okay. And so it looks like we're in the right direction, off to a good start on that move. And that was based on fundamentals and technicals yesterday. The technicals were, hey, there's a downtrend, it broke the support level. The fundamentals were, there's recession fears. Okay, and so that was the direction we went. Now, if we look at larger candles, 1-day candles, You see the broken support here. This was a support on the one-day candles. Here it just plunged below there. So this is momentum. And I have a hard time trading against the current fundamental fear of recession and the current technical momentum on this big broken support level right here. So my inclination is, if you want to buy on Disney on those good earnings numbers and revenue numbers, it looks like maybe the next support level might be a smart spot, that if it does drop further, that maybe that level holds, because that good news eventually should help stall, or at least delay any further dropping once it maybe reaches an important support level further down. So let me drag the chart up a bit, and we see here's that support level that I drew. Here's the 1 week candle support. And so if this comes down near this 80 take profit, and the current signal is 79, then a stop loss below this level looks like it would take a lot of momentum to break this support on the 1 week candles. This has held for a long time. The price hasn't been below here. We can go back to 2021, 2020, way back this way, before we see the price going below that. And indeed, we're back in like April of 2020, before the last time that this has dropped below this support level here. Okay, so with that positive news, you might be confident it won't break below a 3-year low. Could be wrong, but just suggesting that with the fundamental news of better than expected revenue and better than expected earnings per share, perhaps don't fight the current downtrend, but maybe trust the next support level on that fundamental news, if indeed it drops there. So a pending order down here around 80.5, right where I'm looking to take profit on the short-term sell, might make sense, with your stop loss then below this support level. And that's if you wanted to trade with that positive earnings report. Okay, obviously you don't have to do that, but let's simulate if you were wanting to trade with that positive earnings report, then stop loss would go about here below that support, maybe around 78.5, something like that. And if I go to the 1 day candles, can probably view it a bit better. Okay, so stop loss down here below 80.5, or below 79, which was the new signal that came out today. So down here, 78.5, 79 for a stop loss on a buy, pending order to trigger right around this take profit, just above 80, maybe 80.5. So you're risking a small amount at your entry price for a buy pending order, and your take profit then can be up, if it's a longer term move, can be up towards the next resistance. So if you're buying in from this support, your take profit could be back up here at this resistance, which would be around 88. You see 90 is here. My stop loss on my sell, the resistance is right around 88. So your take profit could be about 88. So you'd be going after about $8, $7.50 per share profit, and risking maybe only $2 or $1.50 per share risk to get below this support level. Now, to put this trade into action, we'd have to wait for the market to open, to set up and prepare the pending order. Okay, we can't buy and sell. I can demonstrate if we bring up in the trade area Disney, okay, and you see here you can't buy or sell right now because the market's closed. But once the market opens, then we can do execute when price hits. That's this option. Put the price that you'd want to buy from. We simulated down here around 80.5 or so, just above this support level. This was the 1 week candle support. And it's also the area where the sell signal says to take profit. So right above the support level with your stop loss below. So execute when price hits, maybe 80.5 or so. And then you take profit up towards 88 perhaps. And stop loss down around maybe 79 or 78.5. Okay, risking a couple dollars per share to go after $7 or $8 profit per share. Then you just adjust your trade size to be the level of risk that you want in terms of the risk that shows on the stop loss, which will show here on a live order window. Once you set the trade size and the stop loss price, it calculates for you here potential loss and potential profit. Okay, so you set the numbers first in terms of entry and exit, then adjust the trade size to be the level of profit and risk that makes sense for you. Okay. All right, any questions on that? And I apologize, obviously, the Disney trade, this is the one that I would probably want to set up for you as a simulation, but the US market's not open at this time right now. But any questions on anything we covered? And we went over two main ideas. One is to use the economic calendar for large announcements that are coming up that show good predictability from the past based on how those announcements come in. And the other is looking at the market buzz at something maybe you already heard about in the news, or just a search for articles on different instruments in the way that we did for Disney, and seeing if there's positive news or negative. And obviously there with Disney, we saw a technical signal to sell for the short term, but fundamental news that looks really solid for Disney, maybe for longer term prediction. Okay, and actually trading in opposite directions, short term and long term, is okay sometimes. All right, everybody, thank you for joining. I don't see any questions popping up. Good luck with your trading the rest of the week, and we'll be back at it next week. All right, bye for now.